Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this wild Tuesday, and it is Reversal Tuesday, January 28th, 2020. We're just after 4:30 p.m. Look at the size of this rally. NASDAQ, one of the best days we've had since probably the fall. And I'm talking the season, the fall. And this market up strong. Is this anything more, though, than a relief rally? In other words, coming down so hard, the market gets a bounce. Does it want to come in and fill some gaps? And has anything really changed? That's where I'm really bothered. I don't see anything has yet changed. I think the market can sometimes get ahead of itself. United Airlines canceling flights to Beijing, Macau, I can go on and on down the list. The revenues, I just saw Salvatore Ferragamo, and they were talking that their sales in China down 50%. LVMH down sharply. People aren't going out. Starbucks, after the close today, came out and said that the impact in China is going to materially impact their earnings. Well, you've got to start looking at all this and understand that you get these waves in a market, but we haven't seen, I don't think we've seen the crest top yet of the seriousness of the case. That does not mean I'm right. Markets are always right. What we saw today, though, was the Tuesday reversal. The metal markets that were up big came down. The stocks that were down big went up. What bothers me is the dollar still is higher. The Japanese yen down very minor, 19 points, not like it's falling apart. Bonds and notes down. And the rally in the energy's tepid. That would be the word that I'd use. Still not getting much of a bounce in the grain market. So I think the situation still very severe. I am not trying to make you panic. That is not what I'm saying. In fact, the bounce was healthy. When we take a look off the all-time high close on the weekly chart, this market's only down 50 points. That is not the end of the world here. For the week, we're down 0.46 so far. Last week, the market was down 0.95. Together, that's what, nearly 1.4. And the week before was your highest. That's not a big decline. So the rally certainly put back in some of the help the market needed. When we look at a chart, another thing to look at, this is the market on the 24th, going home on Friday. We knew an event could happen. We were all prepared. What are they going to say over the weekend? Who and the CDC? You get your big drop. Now, we've got to come back here. The low of this day is 32.80.50. The high here is 32.69. So ideally, you'd like to fill a gap in a chart, and today's rally at 32.85 most certainly did that. Now, you don't have to do it right away, but it did it. So you don't have a gap in the chart. You had a bounce that filled a gap, and I don't think you'd argue with me. It seems, at least at this point, it ran out of momentum right there. What's the trend? You still have lower highs and lower lows. So by my definition of a trend, which in a downtrend's lower highs, lower lows, you've got that. I next look to see the neutral number. You know I'm going to say to you, if you've been a regular viewer, I view the 18-day average of closes as the line in the sand. So far, I'm the first to tell you that if you go back in time, each time you've dropped here, this market has proven to be a short time later, the market's gotten over those numbers. Can't argue that. Charles Schwab had a study out. I wrote about it today. And it said that if you looked at these events off of these viruses and 6 months down the road, the market has certainly made up whatever it lost and then some. I'm not arguing with that. You can read their study yourself. So I see the market as neutral, but right now, when I put everything together, I've still got the Bollinger Bands away from the market. We haven't hit the lower band, and I still have momentum down. So from my point of view as a chartist, forget diseases, I don't know anything about them. 32.81 is where the pros are likely sellers. They're wrong 50 higher. That's a heck of a risk, so I'm not telling anybody to take that. And the objective might be wherever that lower Bollinger Band comes in. In the NASDAQ, same thing. If you take a look at the low of this day, it's 91.09.5. The high was 90.77 the day after, and we went back up, filled the gap, went to 91.36. Difference here The difference here is you've got a higher high and lower low, not the same play as in the S&P. The bias is up, momentum is still down. And yes, these markets, when they lost their embedded reading, went to the 18-day average and they held those numbers. In the Dow, trend is down, lower highs, lower lows. Momentum is down. This market, if we come in and look at some gap numbers, the low of this day was 28,796. The next day's high, 28,732. So we're looking for 28,796 to be hit at some point here. You did not get there today. You hit 28,780. You're trying. I'm thinking that the pros are going to sell this market in this 18-day average, throw in the towel if you get over that number, and still be betting. So what am I saying? Well, first of all, I never offer trade recommendations, but as a chartist, what I'm saying is I'm not seeing a change on these charts. What I am seeing is that yesterday, for the first time, the Russell got back down to the lower Bollinger Band. And yes, what I teach in my charting course is the first challenge of an upper and lower band is where I think pros take money off the table. So I was looking for that to be the case. You're getting a bounce. You don't have gaps in this chart. I see resistance still in the market, and I think the pros are still bearish, but they won't be, in my opinion. They'll neutralize if you take out this day's high of 1694.30. So at least I have ideas as to where the market is. Now in the VIX, the market recovered, filled the gap between Friday and Monday, came down, filled it, and hanging right there. As I said the other day, often, in fact, most of the time, I'm thinking pros are selling the upper Bollinger Band. They're selling the puts, the calls, trying to get back to the 18-day average, selling puts when you're getting down to these numbers, trying to get back there. I don't know that they're doing anything right now. I think that it's no longer the market. I think it's the out-of-control disease that we don't know anything about. And every night we go home, it goes from 4,500 people or 4,000 yesterday to 4,600 almost today. We get more deaths. I don't know what the real story is there. I don't know that I'll ever know it, but I know that I'm nervous about it, and I think the market is. In the bond market, you got up and over the upper Bollinger Bands. This was the close yesterday. You only stay over that band 5% of the time. So what am I looking for in an overbought market? I'm thinking the pros took some money off the table. And today the market, you can see, pulling back. Has the trend ended? No. Is the market overbought? Yes. That's one thing I'm looking at. Now, I'm also studying how the 100 and the 18-day average are coming together. That's very interesting. For a market that's looking at an economy that's been strong, that's good. You know what number stunk today? Durable goods, if you took a look at it. It was not a good number. It's a warning. Where's that number going? It wasn't a strong number, one of the worst we've had in many months. Take a look here. You're starting to bring these moving averages together in the notes. And it managed today on a settlement to be just under the Bollinger Band. If you take a look, that number is 130.20 right there. Again, I'm going to repeat, I don't think these markets stay over Bollinger Bands or under them more than that. It's not what I think, 5% of the time, and it's rare to get more than 5 days in a row where they do anything like that. Dollar index, what were we looking for? Just yesterday. Said if you can continue, you got your embedded reading, I'd look for the Bollinger top to maybe be the objective, and certainly when you got there, you sold off. You didn't go much over it. So you've hit another upside target. Is the trend down? No. I'm watching what's going on, again, just like in the other markets. That 18-day average is coming up by this 100-day. Now, people are saying, well, this was the year the dollar's supposed to break. Right. But how big is this Chinese event, and how's it going to impact the world is what we're trying to figure out from a financial concept. We're already seeing these big companies coming out and giving us warnings going forward, a Starbucks and so on. You've got to pay attention because they're telling you what's going on. The streets in Beijing, the traffic is down dramatically. In the provinces where the disease broke out, there is no traffic. It's ghost towns. In the eurocurrency, falling down, got over the lower Bollinger Band, back over it, but there's Nothing but a downtrend. You even had a bearish crossover here where the 18-day average got under the 100. If China's in real troubles, they have real problems with that. All the emerging markets do if that turns out to be. Thursday, you're going to get the Bank of England financial monetary policy decision. I could have just said monetary policy. I don't know that you want to play in front of that. They've got Brexit the 31st. Mark Carney's going out. This could be his song where he goes, you know, we should give the market some protection. Maybe they're going to cut rates. The market seems to be swinging back and forth in there. I see us in a tight Bollinger Band. If you break out, the next support's 128.75, current resistance 130.94, and I don't see a trend here. In the Japanese yen, you've had a dramatic rise to the upside and a one-day pullback. Okay, I don't know that it's more than a one-day pullback. I know the trend is up, supports around the 91.73 level. There's a lot of risk if you're going to play this market up or down, and you're at the mercy of every day what the authorities are saying about the severity of the disease and where it's at. I don't know if you've been streaming. You can, by the way, the building of these hospitals they're putting up, they're all modular. I was watching it and fascinated. It's like a modular home. They must be building rooms that they're going to do operations, whatever they do, somewhere else. They bring them in, they set them on one on another. It's quite fascinating to watch. In the Brent versus WTI crude, you finally pulled back to that differential of the 18-day average. So we've had a correction. Why? Well, it doesn't take, I'm no genius. What I am is somebody that understands China, where does it get its oil from? I'm going to guess Brent, Mideast oil, African oil, and that is, do they need as much oil? They don't even know if they're putting people back to work in these factories. That's what's going on. Here's the Brent. It recovered a little today, got to the right-hand side of the Bollinger Band. There's nothing bullish. You lose the embedded readings and I'll have reasons to get and say something's underway that's different. I'm not seeing it. The same in the WTI, still the embedded reading. And I realize, I think that I'm in a value area here, looking back in historical charts. That's not enough reason for anything. Gasoline finally got its bounce to the right-hand side of the band, but it still has the embedded reading. You need to lose that to get me excited. I'm also getting concerned that this 18-day average is racing to try to get under the 100-day average. That could be another bearish element. And last we get to the nat gas, it's not even bouncing. It doesn't care about the rest of those world events. You know what it cares about? Here we are, January 28th, and it's too warm. We're not getting that freezing weather. Yeah, we have heat demand, but nothing that is major. Tonight I'll be showing the API numbers and all in my research for my traders. One of the things I'm watching in these markets intraday are these pivot points, because you get these wild swings and you're trying to see, can you get an edge in this market? Is it getting ahead of itself? What's going on? I have one video that teaches you the formula so that you understand it. I'm not asking you to do the formula because just about every charting software I've ever seen that's worth its merit is going to have this in there. But what they don't have are my videos that teach you how to plot them, the colors, and then how to apply momentum with them. And that's what I'm going to teach you, how to use them, what they are, how traders look at them, and maybe they can help you get an edge in your trading. That's up to you. How do you get to this? Give us either a call or go to our website, sign up for our free offering. You'll see a free offerings, pivot points will be there. Check it off. It's one of the many things you might have from us. I'm Ira Epstein. You have a good day. I'll see you tomorrow.